What's up, guys? I'm gonna do a little trade review for those who haven't watched the stream. I'm gonna review my trades. So let's do it. Right. Okay. So we see the first trade right here. I don't know why overnight's tripping my screen. Right. So let's do it from this point. Wall Street ticks, lowers their digest earnings. Netflix drops. Like I said, I was invested in Netflix. Yikes, man. Brutal. Right. So, all right. Let's do a little trade review, right? So we were bearish when we opened, right? And then we did accumulate upwards, right? I did say from the start, I mean, we did have some target orders around 25,300 that we were probably chasing, and it wouldn't be a good idea to go short right here in the discount, right? This like overall overnight session, like what's it called? Like it's equilibrium, it's middle line, it's right here. It was at 25,277, right? After that, that would be the premium. We were in the discount, right? Number one rule: never buy in the premium, never sell in the discount. It's not a good idea, right? So we were patient. We were able to hold on to this trade, right? Hold on to the trade. Just seeing how the trend is moving, right? And as soon as volume started slowing down right here, started accumulating downwards and creating a lower high. Right, we're rejecting off yesterday's New York, and it looks like we were just sweeping overnight, right? So my first entry was about right here, right after the first few rejections off New York. Once we were under New York, that would give me a pretty good confidence that we're probably going short, as we were rejecting it multiple times, and volume wasn't picking up, right? If we were going to see volume to pick up to the upside, right, we would have got out of the trade, or at least we would have seen come into this target level of 25,300, right? Target level at 25,300 was pretty strong for a little bit, but then those orders disappeared, right? Those orders got subtracted. You could see, hold on. This thing's glitchy, right? Once we saw these orders, right? They were really thick coming into it at that 300 level right here, right? And then we see all these orders get subtracted the lower we go, right? Meaning there's a less probability that we were actually going to hold on to longs, right? Volume started slowing down. We had icebergs coming in, right? 10 filled, 11 filled, and then we were sweeping stops, meaning that the current volume delta was also going down, right? When delta going down, you can assume it was time to go short. Right, so we did enter twice, right? So we entered the first time right here. This was the first entry, re-entry at this top right here. So, and then TP1 was yesterday's low, right? That yesterday's low line, it got swept, right? That was the first TP, and then we started accumulating upward towards New York view up again, right? What did I do? I did the smart decision, right? After such a large accumulation of orders to the downside started forming, right? We saw all those orders live started forming, right? No real orders forming to the upside. Basic order flow rules, right? No real orders forming. Some algo orders were forming right there, right? We did have some buy icebergs, which was a little dangerous, but as soon as those icebergs, sell icebergs started stepping in, it gave us a really good indication we are going to go lower, right? And then those orders got filled, and then obviously we were targeting that order at 25,100, which was this big red line right there. Real orders, real targets, right? That's what we're aiming for. If we see a bunch of algo orders and orders just start disappearing, go the opposite way. That's what I always say. Just look the opposite way. All right, we're probably going to switch bearish. I call it from the start. I was like, we're going to probably, see bearish. If we do hold overnight and actually start building orders to the upside, that would be a pretty good indication of like, hey, well, we probably should be going long, right? If we had this high volume outburst after opening range, right? then it's like one of those days is just, oh, we're gonna go climb and climb and climb, right? But the market sentiment in general was bearish, right? I don't know if you guys saw today, after earnings, market started falling. Gold kind of went up a little bit. Saw gold accumulating. So gold's accumulating, everything's probably gonna fall usually, but that re-entry point was pretty good, and then we ended up catching full TP at this low, right? That was $600 win. That's the most I could make on the top one accounts with a 20% consistency rule with a profit at 3,000. And then on my second account, which didn't really take much analysis, I was just targeting the continuation, right? So that was right here. We didn't really need the VWAPs because we weren't chasing the VWAPs, right? After coming sweeping the low of the day, we saw that high volume burst, right? If we saw that to the upside, we would have been long, but we saw that to the downside, right? Really big break of opening range, zero retracement, right? So that gave me the confidence to enter short this guy, right? We got big targets at 100, easily met them, right? We fell, what's that? 75 points out of opening range, right? That initial target. We added in 4, added 2 more, seeing the push, right? Always add to your winners. If you see volume correlating with the direction that you think it's going, always add to your winners. Take some out if you need to, right? If confidence starts getting wary, that's what I would do, right? If you see price might shift the other way, take some orders out, right? Limit your risk, and then continue to the downside, right? In this case, didn't really need to because volume said no, right? We're gonna push lower. We're gonna meet the expected targets, right? So those price came in. We saw hidden buy liquidity get hit. After it got hit, you saw this little retracement, and then you shot that, and then price shot lower, another 50 points, right? And then we did hit full TP, and $25 off, but you know what I mean. Yeah, it was just pretty easy continuation, right? That break of opening range is only taken if there's just high volume corresponding with it, right? See this, like if you saw this break and it was just consolidating, like we saw it on the upside, right? Right here, it kind of broke it. It's consolidating, very unlikely chance we're going to continue up higher, right? We didn't have strong orders, we didn't have strong orders to the upside. Volume wasn't corresponding. We were barely hanging on by a thread, right? We were just sweeping the VWAPs. Here, you see high volume burst, really big orders to the downside, and we're under all VWAPs. So that means, hey, we're going short, right? So icebergs, a lot of stops get swept, big target orders to the downside. Couldn't ask for anything more. Anyway. I haven't used basic auction. I didn't talk about basic auction market theory, right? In this case, price was coming in to consolidation, right? I didn't expect the consolidation to last long, right? That's why I didn't mention it, right? Once price starts consolidating like this and creates this kind of range bouncing up and down, right? What do I always say? Wait for the breakout. But in this case, the breakout looked a little bit more obvious, right? It was more obvious we were going short. I was texting Saba today. He caught shorts on ES. It was just an obvious choice, right? This case, the rejection, you can take another setup right here. Rejection off New York, probably going to hit those downside orders again. I don't need to make money. I'm already up for the day. But yeah, it was unlikely we were going to hit yesterday's high. I didn't really see orders at yesterday's high. Nothing big. If we saw big orders at yesterday's high, you could probably catch that retracement in the discount and then catch the long. But there was just no volume. There's no corresponding volume. Market itself, the market sentiment, it's starting to move towards fear. A lot of people are de-risking, right? It's better to go short in those opportunities than to go long, right? When long days do present themselves, they look more obvious, right? You spike up, you stay spiking up, come into New York VWAP or overnight VWAP, and then you see that continuation instantly, right? Those are the kind of obvious, hey, let's go long days. In this case scenario, if you went long in the discount right here, good for you. You caught 100 points, right? You got 110 points. You hit opening range, you got out, right? That's a good entry point, right? I don't like trading before the 15-minute open, right? I say it on stream every single day. I hate doing that. I don't have clear structure of where we want to go. I don't see clear orders, right? I wait for more confirmation, right? In this case, orders got removed. We were in consolidation. Volume slowed down. Volume started picking up for the sellers, right? You see these big spikes. Volume slowed down. Big spike in volume coming down. Saw a little retracement, and then obviously it picked up. Pretty simple stuff, right? I just needed those orders to clear up, right? I was talking about it on stream. Once those orders cleared up right here, because we saw orders right here and right here, right? And they were just bouncing around those orders. A lot of algos were playing games here, right? Once those orders got removed, and then we swept those VWAPs. It was a pretty big move indeed, right? Catching it from the top, if you held it all the way to the bottom, like I said, that would be 170 points. It's a good volume day. Cannot complain about a good volume day, right? Clear direction, right? Some people might have got picked out by longs, which is perfectly fine, right? All you need is just more information, right? If you had the information of Bookmap, you had the information of how to use the VWAPs, right? In that case, it's probably going to be a better outcome, right? The more information you have, the better you're going to trade. I think on this account, I don't know what the hell's going on, right? I opened this account yesterday. I was being an idiot. Lost $600 yesterday. Just made it back today. Consider reviewing your strategy. That's what I'm doing, coach. Reviewing it right now. 62% win rate's not bad. It's just my losses are big. It'll just limit those losses. Because look at that. I'm coming in and then take a big losing day and make it back. That's kind of been the thing. I've been short, mostly been short. I got to work on just not holding my losers. Yeah, but that's the P&L for the week. Right. I could have been up a lot more money, but Monday I would have taken longs. I would have made money. Yesterday was extremely consolidated. I don't know why I traded. I just took one loss and went home. I am home, but I just hop off the computer. Made that back today, and then obviously we're going to try to reduce our risk for tomorrow and Friday. Right. I'm going to start copy trading these two accounts. See if I can get a payout from them. What's it called? But yeah, I mean, yeah. I mean, I did enter with proper protocol today, which was pretty good, right? 2 to 4 micros on high volume days. It really helped me reduce my risk, right? My first trade's risk would have only been like $150 or $200, right? Off 2 micros. I did re-enter in after I got a little bit more confirmation as I saw high volume spikes going short. So, yeah, I don't know. Wednesdays seem to be good. Thursday's my least profitable day. Yeah, that'll conclude the trade view. I mean, it was pretty, I would say it's an easier day, but it took, actual, let me think this through type of analysis. All right. You shouldn't be going into the market and just be like, oh, we're going short, oh, we're going long. Okay, let me just find the right. No, you need to think things through, right? That's why I like the order book. That's why I like seeing the liquidity. That's why I have all these technicals, right? Helps me create a real analysis, right? A lot of people, they think they're not gambling, but they really are gambling, right? If you're just coming into the market, no strategy, you're trading fucking candlestick patterns, right? Like, oh, this candlestick showing that we're going to go short. And then you end up going long because it was just a retracement, right? You need more information coming into the market, right? I fell for that scheme, right? I felt for the people who just trade fucking candlestick patterns. I don't know if they're successful or not. Some show their P&L, some some don't. But in reality, right, in the real world we live in, trading like that is not going to make you rich, right? What's going to make you rich is using the right technicals, using the right analysis, and trade like an actual trader, right? Traders trade in ranges, discount premium. They like seeing the liquidity. They trade VWAPs. You know who else uses VWAPs? Every institutional trader uses VWAP. That's where that's where they buy and sell at a good price, right? That's why price always bounces off or rejects or does whatever with VWAPs, right? Because VWAPs are good technicals, right? Auction market theory works because you're trading in ranges, right? That kind of good stuff. I don't know if I want to touch up on any other points. Yeah, I mean, just coming into the market or just reducing my risk would probably be the best thing I can do, right? Make my winners bigger, my losers smaller. Right? That's pretty simple stuff. Just a lot of it's just bad psychology. My psychology, I can have a good week, no crash outs, and then one day price consolidates, and then I'm like, no, I need to hop in A-micros, bro. I need that full TP. It's just retarded. I'm retarded. I don't know what else to say. I'm a fucking idiot. I need to be able to control myself, right? Some days are easier than others, and then the days where you need more analysis, sit it out, reduce your risk, right? That should have been part of my plan, which it is, but I just didn't follow it, right? Every time I follow my plan correctly, I typically either don't lose, or if I do lose one trade, I'm gonna wait for more confirmation, reduce my risk on my next trade, and then make it back, right? Those are on my bad days, I most likely will make back my money. On my bad days, I'm losing accounts, right? That's just simply bad risk management, for one. For two, bad trade management. Not following my plan. You guys need a plan. If you're coming into this, right, you coming into trading is a business. You need a business plan, right? I have my whole plan. I can go over my whole plan. It's a pretty intensive plan to go over, right? It's my updated trading plan. I'll give you guys a little tutorial. Since y'all motherfuckers like to gamble. Right? It's my trading plan. I don't need to go through this because it's all on my charts, right? I don't know why I have key candles. It should just be market structure. Right? What do I talk about? First 15 minutes. Trend direction, market structure, and volume. Is it trending or consolidation overnight session, right? It was consolidating. Is it bullish, bearish, or flat? Give yourself a reasoning. I don't need to do this because I do it in my head, right? This is for you guys. I created this for you guys, right? Use it. It's worth it. You can mark down your key levels. I do that every single day. And then key liquidity zones, I call them out every single day, right? Are large orders stacking or pulling? Where are stops likely clustered above highs or below lows, right? I don't really look at that as much. I kind of just look at the order stacking, right? And then you have a position and risk plan. Low liquidity, calm conditions, 6 to 8 contracts, re-enter cautiously, wider stops allowed, high volatility, fast tapes, focus on precision entries and quick scaling. That's what I do, right? Daily loss, or it should be daily trade loss limit. Wait, I kind of want to see what's going on in the markets. I called the shorts again. Then max trades, 2 setups regardless of win or loss. Didn't do that last time. And then trade review. I should be doing more trade reviews. I haven't doing it recently, but it's whatever. Right? My sync checks. I'm following my bias, not my emotions. I'll trade reactively only if planned conditions trigger. If I hit my negative 150, I pause, take a short break, minus 250 shutdown. Right? In this case, minus 500 because I was on my other account. That's what you need to do. My edge is patience, not and my edge is patience and execution, not prediction. Right? And then I have my iceberg and auction market playbook set up full version. Confluence stack, auction context, balance, imbalance, value shifts. Right? I talk about it on stream. I have some videos on stream. The one on bank holiday, I was talking about it. What is the balance? What is imbalance? Right? Balance is consolidation. Imbalance is when you see key market moves, and then a value shift is like a reversion. Right? Order flow, delta, volume, pace, aggression, and absorption. We go see that. That's basic. That's basic book map. Book map indications. Right? What's the delta? Just look at it. Is it positive or is it negative? Right? Volume, pace. That's this one right here. Are we bullish or are we bearish? Are we switching? What's going on? Aggression and absorption. Are we absorbing key liquidity levels? Structure, daily high, weekly and daily highs and lows. We already have that on the charts. Prior value, area, edges. I don't really use this. You guys can use it. You can look into it. Market pulse, tape speed, aggression rhythm, and participant shifts. Right, that's all my indicators right here. Right, I got volume pressure right here. I got tape speed right here. And then we got, which one is this? What is this called? A PC, I think it's just price change. But it just shows me who's in control of the market, right? Right, and then let's go over my setups, right? Stop, sweep, iceberg reversal at key level, right? Context, market reaches weekly or / daily high and low, right? I take that trade all the time, right? We come into a weekly high, we come into a weekly low, we either reverse or that's going to be our target, right? Set up price spikes through liquidity, stop run, large volume burst, hidden iceberg absorbs without continuation. Pretty simple. Tape signatures, sudden aggression, then stall, delta spikes, then stalls, right? So say, right, pace starts flipping for the bears. You see volume pressure going up. Okay, that's pace and tape, and that's price change, right? Pace and tape, it'll shoot for the bears, right? If we're going short, right, this will spike up. It'll show more aggressive sell orders than buy orders, and then price change will show more bearish pressure, right? Execution, fade the sweep once rejection is confirmed. Goal, capture the reversal back in the balance or towards mid value. So that's usually opening range. Could be VWAPs, 10 points behind. Stop is 10 points behind an absorption wall. That's what I usually like to do. 10 point, 20 point stop. That's, usually a $200 loss limit, right? If you're doing 2 to 4 contracts. Iceberg ladder, trend defense, directional auction day with consistent data delta alignment, set up multiple iceberg stacking with trend near minor pullbacks or key daily levels. Right, so when the auction consolidates, moves upward, and you see multiple hidden packs of liquidity being hit. Right, tape signature pullback show slowing aggression absorption before resuming. Right, so it's just a continuation model. Confirmation icebergs defend higher lows in uptrend and lower highs in downtrend. We say that all the time. Execution, enter with trend after defeated retest. Goal, ride continuation to the next daily weekly liquidity target. Stop below last iceberg defense zone. This is a little bit more tricky. You kind of want to enter in with VWAPs, right? This is a good entry. Like if you see price start retracing, right, and then you just want to catch the continuation, this would kind of give you a better uh, educated guess of if the continuation is going to go up or down, right, or continuation is going to continue moving up or continue moving down, right. You will see those icebergs, and you'll see the delta, being consistent with where price is going at that time, right, and then you would obviously have a key level target, which is a weekly high, weekly low, whatever it may be, right. Typically, that's a simpler setup, but you need high volume with that setup. Doesn't happen as often as people would want, right? For me, I use it sometimes. I've done it on stream before, but it's usually off a rejection off of UOP, right? Failed auction trap at value edge. Market tries to break balance near daily or weekly high or low. Breakout driven by aggressive delta fails as hidden liquidity absorbs. Tape signature, fast aggression, absorption, immediate reversal. Confirmation, price re-enters balance. Delta flips. I don't really use this. I stole this from Scott Pulcini, but I haven't really used it. I think it's not very my style. I kind of don't like it. I don't use value edge. I kind of just like to simple it down. So if you want to use it, it's a pretty good entry strategy, but it is what it is. Hidden absorption accumulation before break. Market compressing near prior weekly structure or value edge. Repeated iceberg absorption. Absorbs counterflow, no progress until breakout. Constant aggression met with steady fill absorption. Pace drops into compression. Confirmation is bookmap shows liquidity thinning in a breakout direction. Delta stabilizes. Execution enter once liquidity shifts and breakout occurs with iceberg slide. Caption move next to the next structural level, and then stop is inside the consolidation zone, right? That's the trade we took today, right? Hidden absorption accumulation before break. We saw the absorption of seller icebergs. We went short, right? We had the targets, right? This is a great entry strategy, right? But you obviously need to follow your plan, right? Are we rejecting off New York? What are we doing? Are we sweeping New York? Are we sweeping, opening range high? Right? This is just the confirmation, right? If you want to enter in, this is the best way to enter in, right? It was near some kind of structure, repeated iceberg absorptions with counterflow, no progress until breakout. We saw the breakout. Constant aggression with steady fill absorption, pace drops into compression. We saw that. Book grabs shows liquidity thinning. Like I said, I want to see those levels in the order book start thinning out. I don't want to see those orders. I want the orders clear up and show me clear direction, right? And then you do the next structural zone, whatever. Stop run, value rejection, liquidity flip. Stops get cleaned above and below structure, daily or weekly level. Setup, liquidity sweeps, hits large hidden orders. Delta reverses sharply. Tape signature, sharp pulse, then order flow flips within seconds. So it's just a reversion trade, guys. Just a reversion trade. Confirmation, order book flips. Liquidity moves to the opposite side. Execution, fade direction of the sweep. Once book confirms defense, rotate to mean or opposite value edge beyond stop sweeps extreme. Don't really use it that much. Not a big fan of stop runs. Like, I use it. I like it. It's a good confirmation, but for this to be like an entry strategy, right? You rather see icebergs than just seeing a stop run. But you guys can read the rest. I'm not going to go through all of them. Hidden reversal, structure, liquidity wall, value transition, absorption flip. Right? And then I also have an extra information and bookmap tool knowledge for you guys. Would you look at that? I'm that nice. I am such a nice guy that I created an information tool guide on how to use this stuff. Man, but I don't know how to use icebergs. I don't know what icebergs are. Wow, great that I have an extra information sector of my trading plan. Look into it, please. Shows you how to do everything. Market pulse and tape. Wow. I have that as well. Really? I know what delta is now. Volume pro. What? No, Matt, you didn't. Current. Stop it. You. No way. How algos work in the. You're the best. I have everything broken down for you. My bad. Please just take a fucking look at it, right? If you were coming back from one of my shorts or you were watching my lives or something, I literally have a trading plan in my bio that you can take for free with everything explained. I take all these setups on stream. Some I take more often than others. That obviously I will break down to see what works better. What the market is doing, right? Sometimes you need different entry models, right? But they're all explained, and they're all shown how to use, right? You just gotta look at my lives. If you don't know what any of that stuff means, I have an extra information sector for you on how to use Bookmap. It's that simple. Some of y'all motherfuckers do not work. You ain't working hard. Right? So please, if you're coming into this, right? I lost my train of thought. So please, guys, if you're new to trading, if you want to learn how to trade, everything is in my bio, written out for you. Okay? So please just take a look at it. I'm begging, just take a look at it. It's all explained. It will help you catch winners like I do. Right? If you have better psychology than me and you follow my exact trading strategy, you're going to get paid out. 100% without a doubt. Right? If you have the market experience as well, right? Spend time in the markets, done the analyzation, the forward test, the back test, like I have, you're going to do extremely well in the markets. Right? Why? Because I discovered all this stuff for you, right? You don't really see YouTube videos on how to use order flow and Bookmap or how to use icebergs and stops. There's maybe 2 people on Bookmap that will explain this, or not on Bookmap, on YouTube that would explain that to you. You know why? Because they keep it a secret. They're not going to tell you because it's that good, right? I mean, also Bookmap's marketing is pretty fucking trash. So if they want to sponsor me, I'll help you guys out. But I mean, just look at this, man. $1,200 on the day, 2 for 2, without it's not like crazy analysis. It's thorough analysis, right? You do the work, you follow the plan in the morning, but it's that simple. All you need to do is learn the right information, and I'm giving it to you for free. I don't charge anything. I hate all those fucking fake gurus that taught me all that fake shit. So here I am now with a built edge, right? Getting better every single day. And I'm giving you this information for free. And I'm streaming everything live. I've taken a payout live. Is that not enough proof that this stuff works? But that's going to conclude the stream for today. Hope you guys like it. No one joined, obviously. So it's just me talking to myself. But if anyone ever does come across this video, I recommend everything I said. Thanks.